Is a recession about to slam the economy, or is it the greatest buying opportunity that we're going to get the next decade? Fear levels are off the charts. Stocks are getting wrecked. Your 401k, well, it's bleeding out. Altcoins are floundering, and even Bitcoin is stumbling. Investors are fleeing into gold, and you don't need a crystal ball to know that the market smells trouble. I've seen these cycles before, sometimes riding the waves, sometimes holding my breath through the pain. But what's unfolding right now isn't just noise, it's a critical turning point. So let's step back from the panic, dive into the hard facts, and ask, is this the start of an epic crash or the final lead up before a historic run? Today, we're gonna unpack what triggers recessions, dig into historical patterns, expose the current signs of economic weakness, and break down the massive opportunities hiding behind all of the fear. Because when the crowd runs scared, smart money is quietly setting up for one of the biggest wealth transfers of our lifetime. Buckle up, ladies and gentlemen, let's get into it. All right, folks, now before we dive in too deep, what exactly is a recession? Most people just say it's 2 quarters of negative GDP in a row. Sounds simple, right? But it goes deeper. Economists at the National Bureau of Economic Research look at broader indicators like employment, income, sales, and industrial production. Because trust me, if unemployment skyrockets, you're gonna feel it way before the economists officially use the word recession. So if we go into one of these recessions, just how long can they last? How long historically have they lasted? Well, typically recessions have lasted between 8 and 11 months. Short enough to get through, but long enough to cause some real serious damage. So no, it's not the end of the world, but you could really feel it if you're not prepared for it. So what are the potential red flags here? Right now, we've got airline bookings going way down, and it's got the airline CEOs raving the red flags. Danger, danger, danger. Our business is much lower. People can't really afford to travel. They don't have the luxury to travel. Of course, businesses will, but most people who are feeling the signs of the economy, the inflation, they're not going to be going on vacation and holiday and maybe not going to visit family and other things that they usually do. We've also got tariffs that are expected to cost families around $2,000 extra per year each. And with that, let's hear Congressman Kek Bot, I probably butchered that. Let's hear what he has to say.
Certainly the Senate Minority Leader is right that Trump owns the chaos in Washington right now, and that chaos is teetering a good economy into a recession. American consumers right now have the highest inflation expectations in years. You got airline CEOs talking about decreased bookings, which is an early indicator of economic health. And nonpartisan experts are pointing out that his tariffs are going to raise costs on Americans by $2,000 every year. That's food, that's home and car insurance, that's clothing. This is a very expensive reality show out of Washington, D.C. right now for the average American.
And on top of that, ladies and gentlemen, consumer sentiment and optimism is getting absolutely crushed. I know that we're all feeling that. If you're on crypto Twitter, if you're looking at the stock market, we are not overall in an optimistic place. Expectations for personal finances over the next 5 years have hit an 11-year low. But that's not all. Get this, 84% of people think that inflation will outrun their paychecks. So the question we should be asking ourselves are, what actually are the odds of a recession, and what are the current GDP numbers? Well, over on poly markets, traders are now saying there's a 41% chance that we'll hit a recession by 2025. That's pretty good, 41% chance. And things get even scarier when the Atlanta Fed predicts that the GDP for this Q1 is going to be actually negative 2.4%. And just like that, voila, folks, we have our first negative quarter of GDP. Well, that's not 2 quarters yet, but are we heading that direction? But before you panic, ladies and gentlemen, consider this. The GDP drop is almost entirely due to volatile net exports. Essentially, this is the tariff-driven noise. When you peel back these irregular swings, the real stable indicators of the big four of income, consumption, industrial production, and payrolls are actually showing growth of 2%. This really matters because historically, recessions don't start until these indicators have peaked, and right now, they're still climbing. So, ladies and gentlemen, again, the question, is a recession still coming? Everyone's panicking. Everyone except Treasury Secretary Bessent and Trump. We're going to get so rich. You're going to be so rich. And we're going to win. And we're going to fight. That's Trump.
And we're going to become so rich, you're not going to know where to spend all that money. I'm telling you.
But also, Secretary Scott Bessent is very bullish. Here's what he has to say and why he's staying cool.
Let's talk about what happened in the stock market this week. Worst week for the market in 2 years. Does that worry you, Mr. Secretary?
Not at all. I've been in the investment business for 35 years, and I can tell you that corrections are healthy, they're normal. What's not healthy is straight up, that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08. So I'm not worried about the markets.
Here's a key point. The market right now is extremely oversold. Almost every time we hit these RSI levels, the stocks bounce, and usually pretty hard. Sure, sometimes these signals do fail, like in January 2022, but typically those fails happen when we're heading into a bear market, not in a bull market. So the next move here could be huge if you're like me and you believe that we are still in a bull market. It wouldn't be a macroeconomic show if we didn't talk about global M2 money supply and how Bitcoin is highly correlated to that indicator. So if you're new here and you're wondering what is the global M2 money supply, essentially it's an indicator or the level of global M2, meaning fiat currency and liquidity in the entire market around the world. And historically, it has been very correlated to the price of Bitcoin. And when we see global M2 go up, that's usually what they call a leading indicator, where, as we can see, about 2 months after global M2 starts to go up, Bitcoin follows suit. And the higher global M2 goes, typically the higher the price of Bitcoin and other cryptocurrencies go. And guess what, folks? M2 has been skyrocketing. And of course, ladies and gentlemen, we could not underestimate MicroStrategy here. I mean, sorry, it's just Strategy now and Michael Saylor. They're gearing up to raise and buy 21 billion Bitcoin right now. They were responsible for 28% of the Bitcoin bought last year. These numbers are just staggering. You have one entity that owns more Bitcoin than the United States and China combined, and most other countries, in fact. Like in that, combined with that. It's crazy. So far, Strategy, previously MicroStrategy, has been able to at least raise every goal they set out to do and then subsequently gone and buy Bitcoin. So I wouldn't be surprised if they actually achieve this one. And remember, I mean, it's Michael Saylor himself who claims that Bitcoin will be the largest asset on the planet within the next 4 years. Larger than Apple, larger than Tesla, larger than Amazon, larger than silver, larger than gold. I mean, to achieve the same market cap or valuation as gold, Bitcoin needs to go to $1 million. And Michael Saylor expects this to happen at least within the next 4 years, if not sooner. There's another really important factor here that we have to consider. It is called the fund rebalance factor. Now, it is extremely common practice on Wall Street fund managers to have what they call a 60-40 split. Now, with cryptocurrencies, they've actually adjusted that 60-40 split, and 60 and 40 usually means a representation between equities and bonds. But now with Bitcoin and Ethereum and other cryptocurrencies coming onto the scene, they actually have altered that equities, bonds, and crypto a little bit. However, for most, they're still considering crypto similar to equities meaning stocks, usually. And those are kind of risk on assets. So finally, what we have here is we've got the end of quarter fund rebalancing approaching. And it's like Black Friday for buying stocks. Big institutions going on shopping sprees, snapping up deals. And here's why this matters. So what does this all mean, ladies and gentlemen? Well, I don't have a crystal ball and I can't exactly predict the future. And none of this certainly is financial advice. I'm just trying to give you guys the fact as we get them. But are we headed for a recession? Or is this moment actually the best buying opportunity that we're going to see for the next decade? I'll leave that decision for you guys. For me, just so you know, I'm still in risk assets like cryptocurrencies 100% right now, as I personally believe, this is my own personal belief, that we are setting up for a massive move in risk assets and cryptocurrencies. Now, with the caveat that this may not happen until maybe Q3 or the end of the year. However, I think one of the strongest indicators that has been the biggest correlation so far has been global M2 money supply. Not to mention, another thing is that we have people starting to bet on places like Polymarket and others that there's a high likelihood of 3, maybe even 4 rate cuts coming this year, which are extremely good for risk assets as interest rates get reduced and the atmosphere becomes more of a quantitative easing environment. And the odds of the rate cuts happening in May are about 50% right now and slightly ticking up from there. So to wrap it all up, folks, these indicators are not all screaming crash. If you're positioned right, this could be your opportunity to ride one of the biggest moves in markets history. Either way, the choice that you guys make today or in the near future could be one that shapes your financial future. And for me and this channel going forward, my promise to you guys is that I'm going to do everything I can to bring you all of the macro insights, the best macro analyst, and all the data as we uncover it on a day-to-day basis. So if you're not subscribed to the channel, make sure you do that, because my goal here is to help you learn from the mistakes I've made so that we can optimize on what I believe potentially could be the greatest crypto cycle the world has ever seen. America is full on. I've never seen a crypto macro environment that's been so perfectly set up. And for me, well, call me an optimist, but I believe this could be a second chance for everyone who believes that they're now too late to get into crypto and Bitcoin. I hear it all the time. Kyle, you're so lucky you were in 2012 or 2013. Guys, I really, truly believe that we're not too late. That's all I got for you tonight. I'll catch you guys tomorrow. See ya.